Hello everyone. In our previous module, we had talked about the meaning of banking, the meaning of banks and the different types of banks that we have in India. And in today's module, we are going to go a little bit further in defining what are the different functions that a bank has in a country like India. I am Dr. Shumaila Hassan, Assistant Professor, Department of Economics, the Bhopal School of Social Sciences. So let's talk about the functions of banks. Let's quickly have a module overview. In this module, we are going to talk about what is banking, a quick revision of the previous module. Then we will talk about what are the primary functions of bank, and then we will discuss about what are the secondary functions of banks. Let's quickly revise what is banking. Banking can be defined as the business activity of accepting and safeguarding money owned by other individuals and entities, and then lending out this money in order to earn a profit. However, with the passage of time, the activities covered by the banking businesses have widened, and now various other services are also offered by the banks. The banking services these days include the issuance of debit and credit cards, providing safe custody of valuable items, lockers, ATM services, and online transfers of funds across the country and worldwide. As we all know, banks are a very important part of the economy because they provide vital services for both consumers and businesses. As financial service providers, they give you a safe place to store your cash. Now let's talk about the functions of banks. The functions of banks are divided into two categories: the primary functions of banks and the secondary functions of banks. So let's first discuss about the primary functions of banks. The primary functions of banks are divided as acceptance of deposits and lending of loans. Now let's have a quick look. What are the different types of deposits that are available with the banks? First, fixed deposits. Second, current account deposit. Third, savings bank account. And fourth, recurring account. Now let's have a look at how the banks lend the loans, or what types of loans are available with the banks. They can be categorized as the call loans, the short-term loans, medium-term loans, and also the long-term loans, which we are going to see in much more detail in the coming slides. So let's talk about the first primary function of a bank, that is accepting of deposits. The bank accepts the deposits from its customers in different types of deposits. These accounts are known as the fixed deposit account, the current deposit account, savings account, and the recurring accounts. So let's first talk about the fixed deposit. These deposits mature after a considerably long period of time, like 1 year or more than that, and the rate of interest on these accounts is fixed, and these accounts cannot be withdrawn before maturity date. That is, full amount will not be credited to your account. There will be a penalty charge that will be cut from the total amount, and the rest amount will be credited to your account. So therefore, there is a difficulty of time limit in these type of deposits. Now let's talk about the second type of account, that is the current account deposit. These are mainly maintained by the business community to facilitate frequent business transactions with considerably bigger amounts. Generally, no rate of interest or a very low rate of interest is paid on such type of accounts. The next type of accounts that we have is the savings bank account. So savings bank account, it is a kind of a demand deposit which is generally kept by the people for the sake of safety. These facilities are given for the small savers, and normally a small rate of interest is paid annually. Now let's talk about the recurring deposits. In the case of recurring deposit, the fixed amount is deposited in a bank every month for a fixed period of time. These type of deposits are also withdrawable before the expiry of the time limit, but then again, the full amount will not be credited to the customer's account. Now let's talk about the second primary function of banks, that is lending of loans. The loans are also different types which are provided to its customers by the banks. The first of its type is a call loan. These loans are called back at any time. That is the reason they are known as call loans. Normally, these loans are taken by the bill brokers or the stockbrokers. The second type of loans are known as the short-term loans. As the name suggests, these loans are taken for a considerably shorter period of time. That is, a period which could be less than 1 year. And the customer who has availed the facility has to pay back the entire amount under the period of 1 year. The next type of loans that we have that are extended by the banks to their customers are the medium-term loans. These are usually sanctioned for the period which is varying between 1 and 5 years. Now let's talk about the long-term loans. The long-term loans, as the name suggests, are given for a considerably longer period of time, that is, more than 5 years. They can be further divided into, first, the overdraft facility. The bank grants overdraft facility to its reliable and respectable depositors. It enables companies and the businessmen to withdraw amount over and above their actual balance in their current account. Second, we have the cash credit. Under the facility of cash credit, the bank allows the borrower to withdraw cash against certain securities. Now let's talk about the bills of exchange. The bank provides funds to their customers by purchasing or discounting the bills of exchange. The bank charges a commission up to the maturity period of the bills. Now let's have a look at the secondary functions of banks. Apart from the main functions, the bank also provides financial services to the corporate sector and the business and society in various other forms. The first on the list as a secondary function of bank, we have merchant banking. Merchant banking is an organization which underwrites securities for companies, advises in various activities. No person is allowed to carry out any activity as a merchant banker unless holds a certificate which is granted by SEBI, that is, Securities Exchange Board of India. Thus, merchant banks are financial institutions which provide specialized services including acceptance of bills of exchange, corporate finance, portfolio management and other services. The next on the list as a secondary function of a bank is leasing. Banks have started funding the fixed assets through leasing. It is referred to as renting out the immovable property of the bank to the businessman on a specified rent for a specific period on terms which may be mutually agreed upon. A written agreement is made in this respect. Now let's talk about mutual funds. These days, people are investing in mutual funds very frequently. The main function of the mutual fund is to mobilize the savings of the general public and invest them in the stock market and the money market. With the passage of time, banks are involved into various other activities like issuance of the debit and the credit cards. Now, credit card allows a person to buy goods and services upon a certain limit without the immediate payment. The amount is paid to the shops, the hotels, etc. by the commercial banks themselves. Under this service, lockers are provided to the public in various sizes on payment of fixed rent. Customers can deposit their valuables, documents, jewelry, securities, etc. in these lockers. The last on the list, we have underwriting of securities. This facility is provided to the joint stock companies and also to the government. The bank guarantees the purchase of certain proportions of shares if they are not sold in the market. So that's all about the functions of bank. Thanks for watching. See you in the next module.